Welcome to Golden Rule Radio, your short weekly podcast to help you, the precious metals investor, stay ahead of the curve. Each week we'll focus on what's happening in the markets related to the metals, the news that moves those markets, and what's on the horizon next week. We represent a 45-year-old precious metals brokerage firm, and we follow this information all day, every day, and want to keep you informed. Today's January 18th, 2017. We're going to address listeners' questions. We're going to touch base on the metals, and we're going to discuss the related markets. That being said, let's jump right into listeners' questions. Our first question from last week comes from Hot Sauce 610. His question is, so are we not recommending silver?
Yes, we are.
That was...
Tori, tell me why we didn't recommend silver last week.
Well, quite honestly, we ran out of time and maybe I forgot. So to Hot Sauce 610, yes, we absolutely are. And the reason we are is because of the gold to silver ratio, first and foremost, and then expected performance. Am I right or wrong there, guys?
That's correct.
Yeah, completely right.
I think silver is one of the most undervalued assets on the face of the planet.
It really is. And last year's performance spoke to that. So far this year, it's speaking to that, which we'll get into. You know, it really makes a lot of sense if you've got a storage account to hold your silver, if you have silver in your IRA and you're open to that ratio trading. That performance doesn't make any sense if you're not willing to get out of it and get into another metal.
Correct.
Second question from last week. How reliable can technical analysis be in a manipulated market? And this comes from IB12541. Technical versus fundamental.
Oh, man. That's a hard question because I don't have statistics on how reliable that technical analysis is in a manipulated market. I think all markets are manipulated in some sense, whether it's big money just wanting to push a market one way or another.
From our standpoint at ICA, we've always taken a look at the precious metals markets from a fundamental standpoint, you know, the intrinsic value of gold versus the imaginary value of paper currencies. And that's always been the case.
And Miles tends to lean a lot towards the technical. I mean, he's our technical guru, so.
One of them. Personally, I tend to think that you actually can have quite a bit of more faith in the technical side of analysis when you have a manipulated market. Because if you're a wise technical investor, you're never putting all your eggs in one basket. So on the occasion that you have a manipulated market that pushes things outside of a technical range, you aren't going to take the massive losses that you could otherwise if you are taking too large a position in that direction. Now, I don't own physical gold because of technical reasons.
Right.
I'll trade currencies. I mess around in the stock market. I'll own ETFs for technical reasons. I own physical gold for fundamental reasons. So I think that's the big difference. It's not that you have to rely on one or the other. Fundamental analysis is just a real look at how the world works and a real look at how currencies and economies work. Technical analysis is simply a tool you use to try to maximize gains while you're dabbling in those markets.
Well, and one focuses on gold as an investment, you know, from the technical side, and maybe that's a broad brush stroke, but you know, the fundamental side of things really focuses on gold as an asset preservation tool and a store of value. And I think that's why we as a precious metals firm lean towards the latter, because if you look at long-term currency events, the devalued currencies globally from a fiat currency standpoint, you look at, you know, the geopolitical effect on the metals, that there's always some form of geopolitical unrest. And every week we're going to address each as best we can in a concise period of time so that you have an understanding of that big picture. So to the listeners, I hope that answers that initial question.
Yes, and feel free to ask questions.
We're looking at them, and we'll address them every week. So all that being said, let's jump into the metals this week, Robert.
Gold is doing well this year, just like in 2016. Yesterday's close confirmed gold has turned bullish on the daily chart, and RSI closed above 70 line, and that pretty much confirms that the daily has turned bullish. A pullback is probably in order at some point. I think we may have a little bit more to this rise up into the 1250 range, and then we're going to have a little bit of a pullback. But I wouldn't bet on too large of a pullback, because we do have seasonally strong part of this year for gold, and so it may be shallow. I think in the last 16 days, gold has only had 2 small down days. Today, I think it's down just about $2 or $3. So it could be the third in the last 17 days.
Yeah, from the first of the year, it's amazing. The two exceptions are platinum and palladium right now in regards to the precious metals. They have hit some recent levels of resistance, and platinum down 1%, palladium down 2%, but from a gold and silver standpoint, what a difference a week makes, Miles.
Exactly. Last week we pointed out a few levels on the gold and silver charts that we thought we'd see resistance and did not. To be honest, I was a little surprised we didn't stop or at least halt for a few moments at 12.05 on gold. Platinum and palladium, however, we did hit some levels on the charts, and we have had a little bit of pullback in both of the white metals. So what makes me wonder here is, are we seeing a move up in gold and silver based on those fundamental reasons we talked about recently? You know, platinum and palladium are primarily industrial metals. Gold and silver do act as that currency hedge when there is some concern.
Yeah, gold's up 5.5%, silver's up 8.7% so far this year, and so to Robert's point, we'll look for some continued strength, and then we'll end up seeing what ends up happening from a pullback. So before we leave the metals, we really want to give a brief summation on the World Gold Council 2017 Outlook report that came out last week, and so there's some key points here on this video, but we really encourage you to click on the link below, read it yourself. Their expectations are for higher gold prices in 2017. 6 key points ranging from heightened political and geopolitical risks all the way to opening of new markets. So take a look at that report, and then also really listen to the McIlvaney Weekly Commentary this week, an interview with Russell Napier talking about the dollar and gold. So let's move on to the other markets, Robert.
Sure. In the last few months, 2 trades have dominated the macro trading world. They have been short British pound and long the FTSE, which is the index of 100 companies listed on the London Stock Exchange with the highest market capitalization. Then the other one is the long US dollar, long US stocks trade. And that trade has been slowly unwinding this last week. And yesterday, 2 key people came out and said a few things. The British Prime Minister, Theresa May, pledged parliamentary Brexit vote, and Trump jawing about the US dollar and China caused a ferocious unwinding of these trades. The pound rocketed from 1.2, which is a very key level, up to 1.24, while the dollar declined. That pushed gold up. Bank stocks, which have been doing quite well, had their worst day in 6 months. And before we leave that topic, let's also mention the Dow has traded in a range of only 1.07 from high to low, which is the lowest in history, going all the way back to when Charles Dow created the Dow average in 1896, 120 years. I think we can all agree this means the market is coiling up for a significant move. Wouldn't you guys agree?
Absolutely.
Then the question is, which direction? I guess we'll soon find out.
A lot of that information was summarized by Bill King of the King Report this past week. We read Bill King regularly. A couple days ago, he said, "We often comment that the markets tend to peak in 3 steps. Momentum peaks first, volume second, and price last." Well, momentum peaked after the Trump rally on December 9th, volume on December 16th, and both have waned. So the question, of course, is, when is price going to peak?
There is the question. All right, in regards to specific metal recommendations this week, has anything changed?
No, nothing's changed. We are still recommending platinum, US $20 gold pieces, and yes, Hot Sauce 610, we are definitely recommending silver.
Thanks, Miles, and thanks, Robert. Thanks for listening, you, the listener. We'll see you next Thursday. Be sure to follow us on Twitter at ICA Gold for the latest updates from Golden Rule Radio. You can also subscribe to us on YouTube by clicking the subscribe button below this video. Again, listen to the weekly commentary from today with Russell Napier. And you can also give one of our experienced advisors at ICA a call at 800-525-9556 if you have any questions or interest in precious metals investing.
And thanks to everyone who shared last week's show. We appreciate the support.
We do. We'll see you next week.